as an economic matter, it probably doesn't make much difference. The significance of 3%, however, has been principally political. Remember, in 2016, Donald Trump ran saying that Barack Obama was the first president in modern history never to reach 3% growth in a year. And he said two things. One, with tax cuts and deregulation, we will achieve that. And second, we will sustain it. Mm-hmm. What the annual numbers show now is that what Trump has gotten this year is the same peak that Obama got. So when Larry Kudlow came on our air today and said, let's just call it 3%, well, that's fine, but that would apply to Obama as well, and it would undercut the claim that he never got 3%. Second factor is that it's declining, as Steve showed in that chart. 4.2, 3.4, 2.6 in the ones for the first quarter of 2019. The Fed has downgraded to 2.3% for the year, and the long-run Fed projection is 1.9%. Okay. So the question is, did they achieve 3% and will they sustain it? And the answer on both is no.
And Joe, it's important because in order to get, for that tax cut to pay for itself, the growth needs to be about a percentage point above what it otherwise would be. Certainly not below. Is 3% on a sustained basis doable?
Maybe, but just I want to come back to something John said. The convention with economists is Q4 over Q4, because the arithmetic could work where you have growth for the year, but if it's all in the first quarter, the annual average is positive.
So you're a 3.1% guy.
Well, that's how you're supposed to do it.
Right.
I mean, OECD, IMF.
What's the difference between measuring fourth quarter versus the prior year?
I could show you an annual average that shows growth for the year, but sequentially there's no GDP because the fourth quarter is up in the previous year a lot relative to where the new year is. So
I don't disagree with Joe, Kelly, and a lot of economists. In fact, I was talking to Jason Furman, who was Obama's chief economist in the White House, and he said he himself prefers the Q4 to Q4. But that's not the basis.
That's how companies do it.
Right, but that was not the basis of the attack on Obama and the claim that the Trump administration had made.
That may be so, but I try to stay as apolitical as possible. But 3.1 to me is the right number. Can you sustain it, which to me I think is the bigger issue? That depends on productivity. And we've had very weak productivity growth for much of this cycle. Really for the past 17, 18 years, there's been a real downshift both here and globally. And that's anybody's guess. It depends if you want to be an optimist. I'm an optimist that productivity will accelerate. But can we sustain 3% growth? Probably not.
I mean, this is going to be a tough question to answer, but what gets productivity up? If the Trump administration said, you know what, the Obama administration depressed it because it was, heavy regulatory hand and uncertain, macros. Could the Trump administration say we're creating the factors that will increase that, or what do you look for?
The main factor behind higher productivity is what's called capital deepening, which essentially is investment in capital net of depreciation. But there are many other factors.
Which would sound like the kind of investment we got as a result of the tax cut?
We did, but this is going to be measured, Kelly, over not months or quarters, but rather years.
Yes,
it really is going to take a while. The other issue is if you look at some of the work that's been done from folks out of MIT, and you look at productivity cycles, it looks like a step function, meaning productivity is stable for a long period of time, and then after a period of decades, it jumps. And it's conceivable that given all the robotics, the AI, all this machine learning, all these cool things that we could do now with our phones, maybe we're on the cusp of another productivity boom. I mean, I don't think so,
John, I like to think maybe we're much more productive than we realize.
Well, yes, and I mean, Joe is right. It is a step function, and we saw in the 1990s there was a sudden burst of productivity improvement from the digital revolution, and when it arrives, it arrives. We don't know, but you can't necessarily say we're going to have a given level of growth on the hope and assumption that that's what's going to happen. Productivity could go up. Talked to Doug Holtz-Eakin, Republican economist. He said his question right now is, are we decelerating to 2.5 or to 2? And the question of whether we can get 3 in the long run is not going to be answered for several years.
All right, Joe, we've got to go. So as Harwood said, Fed's thinking 1.9%. Right. What is your personal point of view about GDP, even for 2019?
Low to mid 2s.
Okay.
But I would say, look, if the Fed doesn't go, and this comes back to what John was saying, which I agree with, this is why the Fed has to let the economy run hot to see if you get a productivity jump.